Whether you're pre-revenue and looking for funding, or your business is chugging along just fine, but you need more money to scale, pitching your SaaS concept to investors is at once one of the most exciting and stressful experiences you'll have as a founder. It's exciting to be on the cusp of getting the resources you need to grow to fund your vision, but it's stressful because they often ask a lot of financial questions that you don't always have great answers for. And in this video, we're going to help you be as prepared as you can be in 3 minutes to give investors the financial statements that they typically want to see. And this way you can get all those difficult financial questions out of the way, build a solid foundation of trust with them, and really spend more of your pitch focusing on what makes your product, your business, and your vision awesome. So here we go. First up is your income statement, also called the P&L, profit and loss. This report provides a summary of your company's revenue, expenses, and profits or losses for a specific period of time. As a SaaS company, you'll want to include a detailed chart of accounts, including recurring revenue like subscription fees, non-recurring revenue such as implementation fees or add-on services that are kind of one-time, and all the costs that go along with it. And the thing is with the P&L and any other report is granular detail flows through to these reports. So they're really a summary of the data you have behind the scenes. Next is your balance sheet, which is a snapshot of your company's assets, liabilities, and equity. It's an essential report for assessing your business's health, liquidity, and in the SaaS world, it's where investors can see your deferred revenue as well, those payments that you've collected upfront but haven't earned or serviced yet. The balance sheet is the first report I look at when I'm reviewing a business's financials. Next is your cash flow statement. And this shows the company's cash inflows and outflows, just like it sounds. It's important to investors because it proves your ability to successfully manage cash flow with your subscription-based recurring revenue model. And again, these 3 reports are really a summary of what's going on. And so we'll want to dig deeper into the monthly and annual recurring revenue reports as well. You'll want detail on product lines, customers, and a slew of metrics for each of those, but we'll stick to these 2 basics. And these metrics, the monthly and annual recurring revenue, those show the predictability of your recurring revenue base and highlight trends in customer acquisition, retention, and expansion. Related to predicting future revenue are your churn and retention metrics. And these are basically a snapshot, a measure of customer satisfaction and your business's ability to retain its subscriber base. Another big one is reporting on your customer acquisition cost, your CAC, and lifetime value, 2 figures that help investors assess your potential to scale. And finally, your burn rate and runway. Investors want to know how much cash you have left and how long it'll last at your current monthly spend, as this is giving them a better idea of how much additional runway their investment will buy you and if it's enough to meet the runway that your business needs to scale. And with these financial statements and figures in hand, you'll have the firepower to start these conversations strong and to show investors that your SaaS company is a smart investment with solid financials.